Hello, my dear listeners. In today's video, I will cover the dollar collapse that is actually already happened in the past 2 years. So I will prove my point. First, let's listen what Peter Schiff has to say about this.
A real perception of sovereign risk in the United States, sovereign credit risk, and a devaluation of the dollar. So somebody from abroad may want to buy stock in an American company, but he wants to hedge his exposure against the U.S. dollar. This is a huge game changer for the global economy. And again, I think we're going to see the fallout next year. Sometime in 2026, we're going to get the big drop in the dollar. We're going to get the big move up in other commodities. We're going to see the spike in inflation. We're going to see a big move up in long-term interest rates and a big drop in the bond market. Right? But by then, it's too late to worry about the crisis because you're in the middle of the crisis. And of course, the price of gold is going to be a lot higher by then. But there's also going to be no turning back. I don't know that there's going to be any way, to put the worms back in this can. Right? Once the dollar really comes under a collapse, there's no turning back. I don't see what we could do to reverse that process. It's just going to run its course. And at the end of the day, the dollar is just going to be another currency. And it's just going to be another currency that buys a lot less than it buys today. There's going to be a major depreciation, at least as big, if not bigger, than the depreciation we saw in the 1970s. Again, the 1970s was the U.S. going off the gold standard. Now it's the world going off the dollar standard. And this could be an even bigger devaluation.
Okay, so the dollar is going off the dollar standard. I would like just to use, I have prepared the 3 days gold chart here. And I went back in time, and I wanted to see what happened, how in the percentage gains this on the long term, what happened with the gold prices. So if we're going back to, let's say, I look here is October of 2022. Okay, so you see, I drew that there is a trend lines here, and each we're going to acceleration. So this is very old trend line that goes back some time ago. This is a little bit of acceleration. This is another bigger acceleration. This is another bigger acceleration. This is another bigger acceleration. And if we going forward, we see there is two more bigger acceleration. And once we pass those acceleration, we never turn back. But I wanted to measure the increase, annual increase in 365 days. How much gold increase, okay, since this happens, okay? So since we going back, this first acceleration, I will ignore the first one was not that steep. But when we had the second acceleration here, I will say that is officially, let's say, okay, the beginning of the dollar collapse and in inflation in the hyperinflationary style. Okay, so it's begun in October 2023. Okay, so and in 365 days, gold appreciate. So the dollar fell against the gold by 46%. Okay, so if I go to the next chart, which takes the 360 days from that point. To another 365 days, which is very close to where we are right now in October 2025. So the dollar depreciated against the gold by 44%. Okay, and it's basically it's near 4,000. It was at $3,822 at that time. Okay, so and if I project this rate in the future for the next 365 days, I'm getting the price of about 59, let's say in the $5,900. Okay, but if you go here and you look those lines, the recent line, trend line of acceleration. Well, this is very parallel. Okay, so it's a 3-day one candle. It's a 3-day chart. But if we continue on this rate, I measured before the gold will be in a year over $8,000, which will be it will look catastrophic. So I said, okay, so because this cannot go on forever, sometimes we're going to violate those trend lines. So, and I I put, and well, I want to speculate a little bit here, and I put imaginary trend line in the middle between those two, because this last rate of acceleration was look very steep in the percentage compared to previous ones to me. So I put this in the middle, and this I remember like the gold also like the price of gold in 1 year, it's about 5500. So in either case, like this looks very very telling to me, and I agree with Peter Schiff. It's going to be very hard to put now this genie back into the bottle, so to reverse the course of the currency depreciation, especially all the countries are doing the same. Yes, the dollar index could, in the meantime, appreciate against the Japanese yen, British pound, Canadian dollar, euro. Well, yes, that could happen, but if this rate and where's those guys, where's the so-called plunge protection team, which supposed to monitor the precious metal prices and preventing the dollar crisis? They are not. Well, I don't know, maybe they will came out later and smack, and we will have a sharp correction and consolidation, and we will go back to normal. But at least in the past in the past 24 months, even longer, since basically this point back over 2 years ago, they haven't done much. Like the rate of acceleration is very telling. So, and the other things that I wanted to touch here, because it's a financialization of the economy, because once the shift in the mentality happens, and then the investors will start to price their assets in gold, and they will notice that they're not making any money in stocks, that all indexes I don't think indexes down 45% on average in the past 2 years. Okay, so 2 years 45% return in dollar term. I don't think so. So it will become like burning flame. So the money will be just rushing into the precious metals, which will become the new settlement and the new world currency. And there is not going to be reserves. All the reserves will be flying back to United States, chasing some assets. And that's another reason where we see I noticed this on multiple precious metals channels, that they noticing that the government is really on CNBC, and they try to promote Bitcoin in the cryptocurrency. Yes, I think it's possible to see good games, but I agree with most people. I'm not against the cryptocurrencies, but the risks to holding like a Bitcoin or any altcoin especially, it's much higher. You're not going to see in gold 35, 45, 50, 70% correction in 2-3 months, and you have very big upside potential and very small downside risk compared to the cryptocurrency. So I think the potential in the market cap of the gold and silver, it looks to me much better than altcoins. Especially we tend to see very sharp correction after a bull run, which is not going to happen this time in the precious metals, since they are taking the world reserve status and the currency of the settlement of the trade deficit between the countries. So next time, what's the end game of this? If you want to run a trade deficit, you will have to pay for it in gold, and not by a kind of printed money. And then basically, everything gets the value, and we need to restructure our economy and fiscal systems and reorganize the society based on the new economic rules, which is the transition, I think, is going to be very harsh. Thanks for watching. Please comment and like the video to support my work.